Traders Help Desk, and today I actually want to explain, I think, why most traders fail to make money in the markets. Really doesn't have anything to do with your indicators or the markets that you're trading. It has more to do about understanding your edge and understanding losses. Now, I realize you may feel like, oh, I can take a loss, but you're probably looking at losses on each individual trade instead of the bigger picture. And it's real important to be looking at the bigger picture. Now, as most of you know, I've been tracking the binary signals. We have very specific criteria that we use for entry as well as for exit. For example, if you're taking a long, then you have to set a limit order at 45. If you're going short, you set a limit order. I'm sorry. If you're going long, you set a limit order for 45. If you're going short, you set a limit order for 55. And then if it moves, on most of the currencies, if it moves 2 strikes in your favor, you take profits. The exception is the ones that have the 10 pip strike width. In that case, if it moves 10 pips, then you take profit. And the reason is the binary premiums move a little bit differently on those. So I've been tracking these since April the 27th, and you can see that overall we've had 2,021 trades. We've had 1,258 that were winning trades, 763 that were losing trades. Overall, it was 62.25% winning, okay? I do have 2 of them marked in red because no matter how you would have traded those, you would have lost money that week. So for sure, beyond any shadow of a doubt, you have had 2 losing weeks trading the binary signals. Now, this is also dependent. Do you take every signal? Do you only trade a 2-hour period versus, the entire session? Also, since September 22nd, I've also been tracking what each session individually does. So, for example, if I go back to that particular session, then you can see I started on Tuesday, and during the London session there was 2 wins, no losses. During the US session there was 4 wins, 3 losses. During Asia there was only 2 trades and they were both losing. Then on Wednesday, the London session had 3 winning trades, 2 losing trades. The US session had 5 winning trades, 3 losing trades. Asia had 1 losing trade. Then Thursday of that week, we did not have the signals on during London or Asia, only during the US, and there was 6 winning trades, 4 losing trades. On Friday of that week, we had 3 winning trades during London, 1 losing trade. 6 winning trades during the US session, and 2 winning trades during Asia. That gave us an overall profitable percentage for the week of 63.33%. And I have done this for each of the weeks. You can see that this was an actual bad week, and it was one of the losing weeks that I had highlighted. And you can actually see on a lot of days you had more losing trades than you did winning trades, which is also why you had a 49.09% winning ratio that week. Now you can see that on Monday, losing day, you had 4 profitable trades, 11 losing. On Tuesday, you had 8 winning, 4 losers. Wednesday, 7 winners, 6 losses. Thursday, 4 winners, 2 losses. Then on Friday, you had 4 winners, 5 losses. Again, you had, a bad week that week. There's no other way to put it. Then on October the 5th, we had a 55.22% winning ratio. And you can see it was just kind of a mixed bag as far as the sessions went. Sometimes you made money during Asia, sometimes you didn't. Sometimes you made money during the U.S. session, some days you didn't. And this is trading in general. That is what happens. The week of October 12th, well, it was a little bit better because you had 64.29%. We didn't have any trades that Friday, but you can see that, overall, London and the U.S. were better sessions in general to trade. The reason is the Asian session is much slower than the other sessions. Then on October 19th, we went back down to 54.1%. We had 33 winners, 28 losers. But again, you see kind of the same play in the market. Sometimes you would win during Asia, sometimes not. Sometimes you would win during the London session, sometimes not. And during the U.S. session, by overall, it was a better session to trade because the markets were moving better during Asia. During the U.S. session. But again, it's a play. You'll see some days the U.S. session is better, some days the London session is better. Sometimes you can make money during Asia, sometimes you can't. And you can see that actually play out in all of these statistics, which is one reason I started trading them, so that you could see, which session do I really want to trade. And sometimes it really comes down to the market reports for that week that are released. During London, especially on the British pound currencies, it could be something as simple as if somebody tweeted something about the BRI exit, because we've seen a lot of volatility because of the BRI exit. Then on November 2nd, you can see we went up to 73.08% profitable. You can also see the signals did not run during the U.S. session or Asia. We only had 2 signals actually that day, and it was a break-even day. And then the rest of the time, for the most part, both the London and the U.S. session were actually pretty good, with the U.S. session being the better session to trade. And then last week, you can see that we went to 65.91%. And again, you can see that some days London was better, some days the U.S. session was better. And again, you see that the Asia session did not give very many trades. Some days it was a winner, some days it was a loser. So I wanted to highlight, these are statistics for you to look at to decide whether you want to trade the binary signals or not. But I also wanted to highlight that overall we have a 62.25% winning percentage. Now this is going to make a difference in the next step that I'm going to show you. And that is, if you're risking $45, which is what the rules say, okay, and the market moves at least 0.9 in profit based on your risk, okay, then if you have a 58% profitability, you are going to make money. It clearly shows you that. Now, what is 0.9? Well, that's basically about $40. So if you enter at 45 and you set a target at, let's say, 85 or 90, then you're getting that 0.9. Now, sometimes it's going to expire in the money, okay? It's just moved so much in your favor that, hey, there's no way it's going to come back against you, or the odds are it's not going to come back against you, okay? In that case, you would have made 1.2. Now, this spreadsheet does not allocate for that, okay? But what you want to strive for is to get that 0.9. At the end of the week, at the end of the month, is your risk to reward 1 to 0.9, which means you're not quite making a 1-to-1, but you're close, okay? Now, what does that mean, okay? That means, according to this, your biggest drawdown was $616. Your average trade profit overall is $2.88. You had 250 losses, and then you had 350 winning trades. Okay, this is a 58.33 percentage. Okay, so if you just use that methodology, you would actually have made money. The issue is most traders cannot withstand the drawdown, which is $616. They've already given up on that. And this graph actually shows you what does that mean. Well, basically, you've had about 60 trades here before you started making money, okay? And this was all what we call underwater, okay? This is when traders give up. My favorite saying is, shit don't work, okay? That's our favorite saying. We test something, oh, shit don't work, because we're experiencing this right here, okay? But if we had waited, we would have made money, okay? It's just having the patience for the statistics to kick in and allow you to make money, okay? That's part one. Most traders never can sit through that many negative trades. They don't have the money to. Now, the second part of it, and you've probably heard me talk about my edge. My edge is risk to reward, because I've always said, hey, I'm not going to be the world's greatest trader, so I need an edge, okay? My edge actually comes from my risk to reward ratio. On average, I'm trying to get a 1.2, 1.5 on my binary signals. What does that mean? Well, to be quite frank, it means I'm only going to risk $35 on any particular trade. That means I'm going to use an out-of-the-money binary option. Okay? It might be, a half a strikeout. It might be a full strikeout. Okay? And I'm going to calculate this at a 1:1 risk to reward ratio. Okay? So if I regenerate this now, you can see, oh, that's a nice equity graph. So I use $35 on entry. Okay? What is your profit when you do that? Basically, you're making $38.50. Okay? In other words, you're actually coming in under that $75 target. Okay? That's my edge. Okay? And I don't have to be the world's greatest trader. In this case, I'm 56% winning, and I have made money. Can I go down on that? Well, let's go down to 50% and see what it does. 50%, you cannot make money on it. Okay? Let's go to 55%. 55% makes money. What about 54%? And this is at 54, and you can see this one also makes money. That's your edge. Just increasing it from a 0.8 or 0.9 to a 1.1 gives you a 0.2%. I don't know why that did that. It gives you a 0.2 edge. Okay, this is your edge. Now, ironically, in Las Vegas on the slot machines, the edge is right at 0.2 as well. So that 0.2, very minute, but it gives you that edge that you need to be profitable. Now, let's go back over here and look at these numbers, okay? So you've had, let's see, one week where you had 54%. Again, if you're looking at these statistics, based on what I'm showing you right now, you've only had 2 losing weeks. 2. Why? Because you had an edge. A 0.2 edge. That's all you had to have. Okay? Now, it doesn't matter whether you're trading binary options, whether you're trading Forex, whether you're trading futures, whether you're trading stocks. It doesn't matter. It's your risk to reward that gives you that edge, and this is what most traders fail to realize. Number one, you're going to have a drawdown. In this case, remember on the last one it was about 600. On this one, there is a drawdown of $711. Okay, so if you're starting out with a $500 account, you're undercapitalized. That's what that is telling you. You will be undercapitalized. Okay, if you started out with a $2,000 account, well, you would be able to withstand that drawdown of $711. It would be even better if you had a $3,000 account, okay? Then you would not be undercapitalized. But 500, you cannot withstand the drawdown. That's what that means. It's not on a daily basis. It is not even really on a weekly basis. It's on a monthly basis. Can you withstand this drawdown? Because if you're risking too much and you go underwater and you can't take the next trade, if you're too scared to take the next trade because you had a series of losses, well, then you're never going to make it as a trader. Because trading, it's all about the numbers. It's all about your edge, okay? The indicators do give you somewhat of an edge. Price bars give you an edge. But the biggest edge that matters is your risk to reward ratio. Now, with binaries, we can limit that to 0.2. But let's say that I was trading Forex, or I was trading futures, or I was trading commodities. Then I want to get that much higher, okay? Because you're not going to be able to risk $35 typically if you're trading gold. You're just going to get stopped out all the time. That's where it comes more into, can I increase my risk to reward ratio? 1 to 1.5, 1 to 2, 1 to 3. The higher you can get that number, the more successful you will be in trading, okay? But this is really the bottom line of why most traders fail. They don't know what an edge is. They think it's based on edge. They think it's based on indicators or their time frames or the market they're trading. It really doesn't matter. Your edge actually comes from what you're risking versus what you're rewarding. Now, another way to understand that phenomenon is, let's say that you had a store. If you get a product in and you pay $5 for it, well, are you going to sell it for $5? You know, it's kind of the same thing. What we're trying to do is get that edge there that's going to make us a profit. And the edge in that case would be, okay, we need to sell it for just a little bit more. So instead of selling it for $5, maybe we should sell it for $10. There's your edge, okay? And in trading, you just have to understand your edge is not coming from your time frames. It's not coming from your market. It's not coming from your trading plan. It's coming from your risk to reward ratio. And if you don't learn anything else, learn that. And then incorporate other things that you may do to actually even increase your winning percentage, okay? So you can go from, let's say, 54%, okay? Let's go up to 60%. How well does it perform? Well, in this case, you're not feeling any pain really at all. Notice also your drawdown goes down. It went from $711, I believe it was, to $282 just because we started winning more trades. So, for example, on these weeks right here, you didn't feel no pain. There's no pain actually through here. There's no pain on your trades. No pain. Okay? You're not feeling any pain. No pain. No pain. These 2 weeks, not feeling any pain. Okay? That's what that means. But it will take you, some time to get up to this 60%. This, again, using risk to reward ratio, you can say, okay, I don't have to be the world's greatest trader this week. I just have to be able to achieve a 55% or a 54% winning ratio, as long as I have an edge in my risk to reward ratio.